On lesson number 3. Remember, we were on lesson number 2. We just finished lesson number 2, so now we are on lesson number 3. So lesson number 3 topic is how to trade order blocks, right? How to trade order blocks. So this is lesson number 3. We're going to make sure that we learn and master this, and we're going to be as accurate as possible so that all of us will understand what's happening here. So now, how do we trade these order blocks? We're just going to jump right into it. Let's begin to take a look at some real price action example of order blocks so we can learn to identify them and trade them with a rule-based system. The first thing we look for before we identify an order block, the first thing that we look for is a break of structure, which is what the BOS. That's the first thing that we usually most look for. This, the break of structure. First thing first, before we identify, we look for the break of structure. That when we know that the big boys have jumped into the market and they created a very big candlestick, that big very candlestick, it will create a break of structure. A break of structure is when the market has been moving in one direction, the next thing it moves in the opposite direction and it breaks the previous high or the previous low. That's when you know that it has broken the structure. Now it's called, this is it indicates a shift or a strong continuation in the market trend. That's what it does whenever like these big boys they jump into the market, right? So cool. Here's an example. Do you see this is a gamble? This example, as you can see, this price has been doing like this. It has been moving this way, went down, went up, came again, then it has been consolidating. So they are busy placing their orders, right? They are busy placing their orders. Let's say you entered somewhere here and the next thing market moves against you. Remember, we told you that these guys, they're going to make sure that they take out your stop loss before they move into this correct direction, right? Once you entered here, you are taken out over here, you are taken out. That's when you know that this is likely to happen. This is likely to happen. You are now getting kicked out from this thing. So this is the break of structure. The break of structure, we mean that first thing first, market moved in the direction and it broke down. As you can look at this, it broke out, which is what? Break of structure. This is the previous high of this consolidation. This is a break of structure. This is a break of structure. Do you get the point? So from this point to this point, there's the previous high. Whenever you're going higher, that's when we know that this is the opposite. This is the opposite of what's happening. So now, if you were to look at this example, where will you draw your order blocks? Because the topic, it says how to trade order blocks, right? How you're going to trade order blocks. So the next thing that we're going to do, if there is no break of structure, there is no order block, guys. Do not overcomplicate your analysis or higher time frames. Guys, higher time frames are the best for identifying order blocks. Like for example, your daily, your 4-hour and your 1 hour. These time frames, they've got high probability order blocks, so they never make any mistake with those ones, right? Another thing is how to trade order blocks. Remember, the next step, once you've identified your break of structure, the next step is to identify the order block zone. These zones are easily interferable because they are tight consolidation in between impulsive moves. Now, as you can look at this, do you see what I'm talking about over here? Do you see what I'm talking about over here? That's what we're talking about over here. Let me just do this way. Do this way so that you can see it. Do you see it now? Let me do it so that like you won't remember the trademark. The trademark is something that we just wanted to make sure that you don't see, you don't have to copy that. So do you see this? this consolidation right here. So this consolidation right here, it helps to see that these guys, they're still staking up their orders. Remember, it was like an order block. It's after the consolidation. This is an institutional order blocks whereby they just adding more orders. Remember, this was the first, then the breakout structure, boom. Now the next thing is consolidating. Once it breaks the next previous high, it passes again, it does that. So what are we looking for now? We're going to, okay, no problem, I'm still going to explain to you how and why and where, which one is the correct order block, because you have learned that the last candlestick in the opposite direction is the order block, but which ones are the strong and the high probability order blocks? So the best way you can do that is to highlight these zones is with a simple rectangle tool in your charting platform. It's important to note that you should include both candlestick bodies and the wicks when plotting your order blocks. So basically what happens over here, whenever you marking your order blocks, it's important to mark your what? Let's highlight it. It's important to mark your what? Your body and your wicks same time, so that it will become like, you'll see, you don't just have to say, no, I'm gonna mark only the open of the candlestick, I'm only gonna leave the wicks behind. Guys, the wicks, they do the damage and the bodies, they just do the work. Simple. So you need to make sure that, guys, you are aware of this, what's happening in the market. Next, we're still on the how to trade them. Now we have identified our point of interest. We can refine our zone down to the last opposite candle prior to the impulsive move. In this scenario, we have bullish momentum and we are looking for buys. We need to identify the last bearish candle prior to the bullish impulsive move. If the surrounding candles wicks are small, it's best to include them as well, all of them, right? That's why I said to you guys that whenever you want to utilize this, you have to make sure that you mark all of them at once. That's what we're talking about over here. So now look at this. Do you see how we marked our last bearish candlestick over here? Remember, the market, the price is still going up and then consolidated. It created like a break of structure. Remember, this was your area, the break of structure over here as well. Remember that we highlighted this. Once we highlighted this, it was whereby now we knew that this has broken the structure. This was your BOS. Excuse me, I'm not using the trend lines and everything. That's why my line's not that straight. But excuse me. So once there is that thing that passes, and then you know that first thing first, it has created an impulsive move into the what? The uptrend. Now we're looking for what? We wait. The best thing is to wait. We're looking for buying orders. We're looking for long opportunities in this scenario. So I was explaining to you how you're going to make sure that you mark your order block. This is how you're going to mark your your bullish order block. You only mark the last candlestick in the opposite.